Hello and welcome. You're watching Closing Trade here on ET Now. I'm Harsh Saita. Let's quickly look at what the Nifty is doing. Well, we're holding on to 25,900 at least at this point. We've seen a bit of a fall of around 100 points from the day's high. So we're seeing pressure where that is concerned. But we've done very well if we're looking at the intraday chart. From the lows of the day, we swung into the green. We clocked 26K and now we're seeing a bit of a reprieve with regard to how it's playing out. Now let me talk about Asian Paints because it's the top performer on the Nifty 50, 4% higher. Hindalco and ICICI Bank around 2 to 2.5% higher. So those two are gaining as well. ICICI Bank is the top contributor on the Nifty today, contributing nearly 50 points to the Nifty's gains or to the gainers within the Nifty pack. Now looking at Interglobe, which gains for a second straight day. Bajaj Finserv also doing fairly well for itself, and L&T is up 1% as well. The losers, Eternal, there's a block which has happened there, so the stock is down 3%. Shriram Finance is down 1.5%. ONGC also a little bit of a cool-off scene there. 1.25% lower on an ONGC and an Adani Ports. That's of course on the Nifty. Now let's talk about the broader markets. The Nifty mid cap has slipped into the red. The Nifty small cap is also sitting in the red, but just a wee bit. Nothing major in terms of the losses that we're seeing, but that slip is evident. It's quite a large one. You can see that gash over the last few minutes that has played out on the Nifty 50 mid cap as well as small cap indices. So need to figure out as to what's playing out, and we have Kunal with us and we'll bring him in just a minute to give us a sense on that. Let's talk about some of the other losers in terms of sectors. The Nifty India Defence Index is down nearly 1%. Cochin Shipyard's numbers didn't impress at all this morning. 0.5% lower even on the Nifty PSU Banking Index, where really nothing has happened. There's no trigger there, but it's losing 0.5% thereabouts. The Nifty Bank has also slipped from the day's highs, is up around 1/5 of a percent now. Metals is gaining though, and so is Pharma. 0.5% higher for both of those. Nifty Realty is up 1/3 of a percent thereabouts. So that's broadly the texture. FMCG 1/4% lower. IT also not really doing much, frankly. So that's currently in terms of the sectors how the play is going. Let me also talk a little bit about the breadth. The breadth currently is sitting in the green. It's favoring the advances, but just by a wee bit. Around 1,200 advances to 1,000 declines is what we're seeing on the breadth at this point. So so you need to keep your eye out on that one as well, because we're seeing some slip-ups where the indices or the benchmarks are concerned. Now let me talk about earnings candidates and what's happening in that space. Some results and you look at Aether Industries, the stock is up 7% on the back of very, very strong numbers. Record quarterly performance by Aether Industries. Granules also doing very well for itself, 2.5% higher. Paras Defense is up 2% as well. Astra Micro is among those who are the casualties of the day on the back of earnings, 3% lower on that one. Sky Gold also down around 2.5%. But really overnight, the one that really stood out in terms of numbers was a Care Ratings, up 7%. Data Patterns was the other one, up 6%. Nazara Tech, Gandhar Oil, Supriya Life Sciences. We spoke with management of Supriya as well, 4% higher on a Supriya. So those are gaining anything between 4 to 5%. The big casualties, Endurance Tech is down 8.5%. Cohance Life Sciences, not the best set of numbers, 8% lower. Lemon Tree down 5, DCX down 5, Cochin Ship down 4.5. So you're seeing outside of those couple of names within the defense pack are doing really well and have posted very good numbers. You're seeing some bit of a cool off within those defense names. You want to watch out for how those play out. Kunal, what's happening on the index? We're seeing a bit of a slip up, trying to get a sense. Cautious at this point. Would you execute any trades?
Not execute any trades, but I think this tells you that the third attempt towards 26,000 mark. Yes. Slight nervousness for the index traders closer to this 26,000 levels. Of course, on the back of the anticipated results which is there tomorrow. So I think that could probably keep the markets under slight bit of a check over here. Nothing much to sort of concern about, because the market breadth is still quite positive, I would say, not extremely favored like what we had, I think, yesterday or day before, where the advance decline issue was significantly on the higher side. But then nothing much to complain, because till the time you see follow through up move for the indices, the Nifty heading slowly and gradually on the upside, we may expect that you might have those one-off days when the index just about consolidates or slips up from the day's high. So broadly, yeah, I think the view remains positive. It says that 26,000 mark is acting as a bit of a resistance of sorts and a little bit difficult for the markets to climb and surpass about those levels. Hopefully, post the event out of the way, we may have a clear headway towards 26,000 mark and above.
And Kunal, your picks in this market?
So I'll go with a couple of buy calls. We flagged off Muthoot Finance in the morning. That stock is doing reasonably well. It's up closer to the targets which we'd expected at 3,400ish odd levels. So I think traders could look at a fresh trade over here for Muthoot Finance, expecting the gold prices to keep on remaining buoyant. So 3450 broadly as a target for the stock, and now stop loss could be traded to 3350 for traders who are looking at a fresh buy. Vodafone Idea comes back into the breakout mode. The stock climbed above the 10.5 levels, which we had anticipated. So now we can look at the revised targets of 11.2 for the stock and stop us at 10.4.
Okay, so those are your two picks for this afternoon. But Kunal, defense stocks, bit of pressure today. Now I know that some of that is fundamental in terms of its reasoning, but give us the technicals. Would you stay away at this point? You were particularly bullish with regard to the defense counters led by BEL.
Yeah.
But
so
what's the take now?
BEL still looks to be the strongest amongst the entire pack. I think HAL post results yesterday has taken a bit of a setback.
Yes.
So maybe I think the stock will take a couple of days for itself to get back into some bit of a support. We need to see whether the stock holds on to the crucial supports. I think today also HAL managed to hit a swing low of 46.30, 46.40 thereabouts. So maybe a retest of that level over the next couple of days could be a good judge whether the stock has found good support or not over the near term. But broadly, yeah, I think the view for the entire defense pack remains on the positive side. It's just that, like what we had last week also, where many of the defense names are not moving in a synchronized manner. So you have to be a little bit more choosy and specific about which stock to enter and what levels.
Okay, so that's the take with regard to some of the defense names, but Asian Paints and Ashok Leyland are the two other big counters which are making moves. Let me first talk about Asian Paints. Kunal, when we spoke this morning, you spoke about a multi-month breakout on an Asian Paints. You said that there are some gaps which have been filled up. You also spoke about the fact that 3,000 could well be on the cards, but we're very close to 3,000 now. Would you stop at 3,000? Would you wager a call to increase that? Give us a sense there.
No, I think there could be a possibility that maybe over the next 1 or 2 days, the stock may start to face a little bit of resistances, because right now what's happening is that the RSIs on the daily and especially on the hourly charts for Asian Paints are entering into slight overbought territories. So that will probably keep the markets, the stock under a little bit of a check. And then look at it this way, even the markets are facing some resistances at the 26,000 mark. So I think in that sense also, it could be a good enough zone where the stock may just about consolidate. So the bias is on the upside. 3,000 still remains to be the target now, but we are since very close to those kind of levels. I would expect the pace of the rally to slow down a little bit for Asian Paints.
Okay, so not as bullish after today's move, it seems. Is that just about fair?
Yeah, from a trading angle, yeah, not as bullish, because the risk reward is not in your favor. You are looking at 70-80 points on the upside, which is not meaningful.
Fair. Okay, and Asian Paints, of course, in focus on the back of the numbers that it posted. Stella said 11% growth in the decorative paint segment was very, very strong, much stronger than the 4 to 5% anticipated. And we spoke about this yesterday. Yesterday, 5% move. Today, another near 5% move. And we spoke with the management, and the management told ET Now that it expects stable raw material costs ahead with benign prices and healthy product mix. The company sees stronger H2 growth in its decorative segment. Listen in to what they have to say.
As of now, we don't see any pressure with respect to any pricing, because the raw material prices have been benign. In fact, we have seen a deflation of about 1.6% in this quarter overall. And going forward also, we are not seeing any much pressure with respect to the overall raw material prices to that extent. There are definitely pressures in the market from a point of view of competitive pressures in terms of what we see. The portfolio is largely led by the protective coatings, and we see some pressure from the point of view of powder coatings, which have been there to that extent. But going forward, I think we should be able to retain the current margins in terms of what we have delivered in the industrial business.
Okay, so that's of course Asian Paints in focus after those numbers and what it delivered. Another one which came out with numbers was Ashok Leyland, and this was yesterday again. Again, we had this conversation in the morning, Kunal, with regard to Ashok Leyland. The numbers at the outset were a bit of a beat, but essentially it's about H2. They're saying that H2 will be materially stronger than H1 with regard to demand pickup given GST. That's one. The movement within the economy will go up, and therefore CV demand will likely go up. LCV will see growth, and mind you, LCV is 35% of Ashok Leyland's top line. So therefore, any movement there or any growth there will likely also pose upside possibilities to Ashok Leyland's overall numbers. That's what you want to look for. And there is benign pressure from raw material prices, and that should obviously keep margins well above 15% is what they have suggested. Now, of course, it's a strong second quarter. The commentary remains upbeat. Srishti is here with the take on Ashok Leyland and what the numbers look like. Srishti.
Well, yes, Ashok Leyland did come out with a very good set. It was almost an inline set versus the street estimates, but it's the management commentary and the internals that were definitely good, and one of the reasons that the stock is higher by around 5 to 6%. Let's talk about and let's start with their truck division, and especially with respect to the guidance that the company has given. For now, they have maintained their guidance for the overall industry, which they have given to be mid-single digit growth for MHCVs and a slightly higher for LCVs. But with the whole GST reset, the company is very confident that the industry can exceed this guidance number, and along with that, the H2 is generally better versus the H1, so a clear indicator that the volumes are expected to go up. But in terms of the margins as well, if you look at the internals, it's the export business that has done very well. A 45% growth on a YY basis is what the company has registered. The margins are better on the export side, and all in all, both of these factors should bode well for the automotive margin division in the times ahead, and the company does maintain their mid-teen EBITDA target, and they believe that is achievable in the medium term. Now let's talk about some of the other non-core businesses and non-auto businesses rather. First up is defense. Very strong growth that the company has registered. The company and the management is confident of a double-digit growth in FY26, and the order book as of now is also quite very healthy. For now, the focus is on execution rather than getting more orders. In terms of the switch performance, they are sitting within total order book of almost 1,500 buses. There too, they have actually been the PAT positive for switch mobility, which they have earlier guided till towards the end of FY26. So they are running ahead in terms of the switch guidance, and the management also said that the going on the next target to get switch free cash flow positive by FY27 is what they have said. Along with that, it's Hinduja Leyland Finance, the one of the value unlocking process that is still underway. For now, we are getting a clarity on that yes, the listing is likely in the late Q1 and early Q2 FY26. So this time around, we are not getting to see that the management is shying away to give a guidance on that particular number and the listing of Hinduja Leyland Finance. So all across the board, it's a positive commentary coming in from Ashok Leyland.
Right, and of course, PAT positive, in fact, on switch mobility in H1 itself. So very, very impressive from Ashok Leyland in terms of following their guidance and commentary. They've exceeded that. And the 5% move, obviously, it seems is warranted. Target prices were hiked as well on most brokerages and analyst radar. Kunal, your view on an Ashok Leyland after the 5% move today?
Yeah, I think now, again, I think just like with Asian Paints, it's getting a little bit I would not say frothy, but a little bit into that resistance kind of a zone at the 150 mark for Ashok Leyland. The volumes today are on the higher side, and we had a very similar high volume day for Ashok Leyland, I think a couple of months back in the month of August, made somewhere, where the stock had jumped up some 6-7% on a single day. Post that, subsequent days, the stock had seen a very minor uptick, but then eventually in the next 1 month, the stock went to a correction of more than 4 to 5%. So I would probably expect that now could be a zone closer to 150, 152 range, where the stock may start to see some bit of a resistance and some bit of a cool off or price correction into the stock.
Okay, all right. So that's on Ashok Leyland. What we'll do is we'll slip into a very short break. We are already talking stocks, but we'll continue to do that fundamental side as well, more perspective. Stay with us here on ET Now. Welcome back and thanks for staying with us. As promised, a fundamental voice on Indian markets, Satish Ramanathan, Chief Investment Officer at Equity at JM Financial Asset Management, here to speak with us and give us a perspective. Hi, good afternoon, Satish. This is Harsh here. Let me start off, Satish, with trying to understand where is it that you're seeing Indian markets at the current juncture. We've flatlined over the last, maybe, if I call it 13 months odd. We've seen a bit of a correction, we've seen a bit of a bounce back. Where do we see things at the current juncture? Give us a view.
Good afternoon and thanks for having me on your program. What we expect is that the market valuations are fairly rich even now. There are pockets of value emerging in the BFSI space, some of the utilities, some of the metal names as well. So what we see is that value is emerging gradually in some pockets, and the growth is also picking up in the economy. Corporate profits are also picking up. So I think the momentum should improve going ahead, especially for the markets.
So okay, you seem fairly sanguine. So the time correction, you believe not good enough, and maybe we'll see another 3 months of sideways movement, and that would be fair. Would you believe that is so?
Yes, given where valuations are, either a market correction or a sideways movement would make it a little more reasonable for investors to look at.
And if one were to look at bottom-up sectors, stories, pockets that you're liking, you spoke about the financials, which you find attractive, at least at this point, to a certain extent relative to others. Which are those pockets which are looking relatively better for a tactical play, 6 months to 12 months?
I think in terms of relative valuations, even though growth may be lower, large caps present a better allocation strategy, as well as also having an exposure to some of the BFSI, telecom, utilities, and even pharma and IT are coming into the reasonably valued zones.
And utilities, how would you judge that? Because it's a pocket where we've seen very, very strong returns already. And we've seen maybe a year and a half of sideways movement now to a certain extent. Where within utilities would your picks be?
Some of the alternate utilities, green energy, these are areas where we are a little more positive. It may not be just pure utilities, but supplies to utilities like companies in the cap goods space which supply to utilities to build up their capex. And some of the green energy space as well.
Satish, your views are unique. There's no way to play GST. There's no way to play consumer. At least I don't hear it. Give us the thesis there.
No, in terms of GST, what we see is that, yes, it's given a shot in the arm for the markets and sales have also picked up. But we need it to sustain. And what we have seen is stock prices have moved ahead of expectations. It has to get reflected in numbers and it has to sustain. And that's where we are waiting and watching per se. But having said that, it's clear that there is more money in the hands of the consumer due to lower tax rates. The aid pay commission will also pay off over time. And we will see a situation where the lower inflation also translates into higher consumption. So our portfolios also look at consumption and have a decent allocation towards consumption as well.
Satish, you spoke about pharma, you spoke about IT, but not with as much conviction, I beg your pardon. How much of a correction likely would get you interested? Because IT has been extremely range bound, right? The IT index has fluctuated between 33 and 36,000. Do you believe that a slip from here, 5-10% is warranted, and that would make you interested in how IT looks in terms of valuations?
I think we can't use a simple brush and a single brush for all IT. What's happening in IT is that the large cap IT names are finding it a little more difficult to grow as compared to some of the smaller companies and mid-sized companies. So the preference would be towards those companies or companies that have an active AI component. So that's something which we need to highlight. And so it's something which is a tale of two halves. The IT index is weighed down by some of the larger companies and not the smaller companies. So it's irrelevant to look at the index alone.
And Satish, are you sitting on a larger pile of cash? Is that at all something you're doing? Because if you're not positive equities in a large fashion and you're expecting a correction, is that reflecting in your portfolio, or you don't take cash calls?
No, we don't take cash calls, Harsh.
Okay, got it. But if you had the option, would you be sitting on cash at this point? Is that what you would advise someone investing in your mutual fund?
No, a cash call is a fairly dramatic call in the sense that the only outcome that favors cash is a market fall, a sharp correction. In a situation of a time-based correction, it really doesn't help, because all it does is it reduces the volatility of the portfolio, but it doesn't help you earn extra money than allocating to the good quality stocks.
The other piece, Satish, that's playing out at this point is within the consumer space. There's plenty happening in leadership rejigs and changes. Something like Britannia has seen that now, and along with it, there were a couple of names who saw it in the last 6 odd months as well. Your take with regard to these changes, does it in any way diminish the story in some fashion? Does it put the strategy of some of these companies in your sense?
No, so in the consumer names, what happens is that we need to break it down again into mature category consumer names in such as FMCG, the traditional FMCG, and the foods, etc. And then the newer challengers that are coming in. So the challengers are really doing a good job, whether it be in paints, whether it be in biscuits, or anywhere. If you see, the challengers are growing faster, and that is translating to again a dichotomy that we saw in the IT pack of large companies growing slower than the mid-sized and smaller companies. Similarly, what's happening in consumer is the delivery channel is becoming very much more important. So quick commerce is becoming far more relevant as a consumer delivery option rather than the producer of consumer names. So it's really shifting from consumer manufacturing to delivery. And that's where we see that the tilt in the portfolio is taking place.
Okay. Would you play some of these platform companies, Satish, at all, or are just and if so, how do you value them? How should one look at valuations in some of these platform companies? And maybe not just Eternal, not just a Swiggy, but pretty much most of the platform companies. We had new listings, Lenskart, Grow. How should one look at valuations there?
See, I think the platform companies have to be broken down into two aspects. One is the routine platform companies, which you use every day, and the episodic platform companies where you buy a pair of spectacles probably once in a year or twice in a year, maybe. So that's something which we need to understand and differentiate quite differently. And the routine platform companies which you use daily, the user charges are fairly depressed in the current context for the convenience that they offer. And if the subscription revenues keep going up, you could see many of these companies showing disproportionate profit growth. And that's the hockey stick effect we will start seeing in these companies. What is currently happening is there's a fair degree of consolidation of market share in the platform companies, and leadership is being quickly established. And therefore, it's an interesting space. We need to watch it. Valuations may look expensive, but may actually look cheap 3 years out or 4 years out when they start pricing all of their products and services.
You spoke about IT, and the major thrust that you gave on IT was the fact that pick companies which are within the AI space. Pretty much every company is talking about AI, right? All of the IT companies, pretty much all of them are providing AI solutions. How do you differentiate between them?
A little difficult at this stage, Harsh, because what's happening is that we are seeing a situation where we don't know the quantum of AI and the type of work that each company is doing. So we need to kind of differentiate between companies, and that will come through probably 6 months or 1 year later once there is clarity about the type of work that they do.
Yatharth Hospital's numbers, and I just want to quickly flag that off. Satish, I'm just going to interrupt for a minute. The top line is a record quarterly top line that they've posted. Profit, the EBITDA levels are largely the same as last quarter, so the margins have shrunk a little bit. That doesn't look too good because they've always maintained margins above 26% at least, or rather above 25% at least over the last couple of years. There's not been that challenge. My sense is that margins have seen a bit of a shrink. So you've seen volatility on the stock. Profit flat on a sequential basis. Typically, you don't look at these companies sequentially, but I'm just trying to give a perspective that despite record quarterly sales, profits are largely the same as last quarter. And that might mean that margins have shrunk a little bit. We'll wait and watch. There you go, 23% margin number on your screen, which means that margins have shrunk. So stock went up, it's come back off. Satish, any of the names within the hospital space or the healthcare space that you would target? You spoke about pharma earlier. Healthcare, is that something that interests you? And again, we've seen a run up. How are you looking at valuations in that space?
So I think the healthcare space is a very promising sector given its degree of penetration and the fact that as the country ages and becomes more prosperous, the demand for healthcare improves and increases. So we do have a decent allocation of hospitals across almost all of our portfolios. And we have a couple of names in our mid-cap portfolio as well as our flexi-cap and large-cap portfolios as well. But we are optimistic on this sector, and we believe that it has a long runway of growth.
Okay. Satish, thank you so much for coming and speaking with us. We'll let you go on that note. Pleasure speaking.
Thank you so much, Harsh, and thanks for having me on board.
Right, and viewers, what we'll do is we'll slip into a short break. On the other side, we'll continue to get you perspective. Some big moves. The Nifty has fallen from the highs and very, very quickly. We're now absolutely flatline on the Nifty 50. 25,900 is where we continue to be at, but 100-point gash downwards from the day's high is what we've seen. What we'll do is slip into a short break. On the other side, we'll continue conversation.
Back with closing trades, and you're catching us live from the SBI Live studios, and the volatility continues. Completely flattened out after hitting that 26,000 plus mark in trade on the Nifty. 25,992 is where we're currently at, even for the futures. And look at the volatility on some of the individual given names. If you look at Asian Paints, Hindalco, or ICICI Bank today, one would think that the Nifty picture would be a lot different. Or for that matter, even an L&T or an Interglobe Aviation, Bharti, some of the steady blue chips are the ones which are holding out. But there's equal amount of drags as well. Look at some of the Adani group of stocks. Look at Eternal, that's down 2%. In fact, it's struggling around that 300, 310 kind of level right now. M&M is down today. BEL is down. The only good thing is that the gainers and the quantum of gainers is a lot higher than the losses that some of these individual stocks are sitting on. Asian Paints up 4%, Hindalco up 2%, and ICICI Bank single-handedly comforting the Nifty today, along with some L&T as well. That's holding up a solid 2% as we speak. Kunal, what does today's move on ICICI Bank tell you in this kind of a volatile Nifty move?
This is a very strong move for ICICI Bank because, this takes the stock back to above its 200 moving average, something which I think the stock, was missing out in the last many weeks of, this participation on the bank Nifty. Where you'd seen private sector banking names, especially the mid caps, doing pretty well. But I think large cap names, ICICI Bank was an underperformer. The stock now coming very close to that 1400 levels. I think it's off by just about 0.5% or 1% from that 1400 levels. I think a breakout of that for ICICI Bank could be a very strong confirmation that we could be looking at a fast realignment for the stock with respect to the other banking names.
Trying to get that leadership position back. That's ICICI Bank and trade for you. We've got Nilesh Jain as well joining in on the show. Nilesh, hi, afternoon. Just looking at some of these buoyant mid-caps. And I don't know how many of them do qualify as mid-caps any longer. But a PG Electroplast, a 7% tear up. Ashok Leyland higher by roughly 6%. Biocon, a 5.5% move yesterday. Today, another 3% higher. Or for that matter, even Hindustan Zinc. Any trading opportunity in any of these momentum plays today?
Very good afternoon to you. Good afternoon, everyone. Absolutely. So, couple of stocks we have already recommended to our client as a part of disclaimer. So, Ashok Leyland and Biocon are two of them. So, we continue to remain bullish across all these counters. Ashok Leyland, our price target comes up around 155 to 160. We still believe that there will be another leg on the upside in this particular counter, although the risk and reward is not looking favorable at current level. But buy and decline should be the strategy, keeping a stop loss below 144. Any dip from here can be used as a buying opportunity, and target would be 155 to 160. Talking about Biocon, it has given a fresh breakout today, good down the bottom formation. In fact, if you see across all pharma stocks, we are witnessing a good momentum. So Biocon upside target could be somewhere around 430 to 445, and the stop loss can be placed somewhere around 405. So it's a buy at current level and on declines as well.
Okay, those are some of the buoyant movers from within the broader end of the market. And if you look at the broader end, and if you just look at the advanced decline picture, it's not looking all that bad. While sure, there are deep cuts even within the liquid universe. I'm looking at a Union Bank, which is down 2.25%, Astral down over 2%, Uno Minda down nearly 2.5%, Policy Bazaar, Supreme Industries. These are all names which are falling anywhere between 2 to 2.5% apiece. But the breadth is quite okay. It's largely even Steven, a count of 117 standing to the declines within the F&O pool right now. But to the losers list, look at a BEL today, and then of course, draw that in with a Cochin Shipyard earnings, for instance. Disappointing set of earnings. That stock saw a gap down when it started off in trade, and from there resurrected about 3% or so. I think on open it was down about nearly 8% or 7%, and it's now stabilizing around those 1700 levels. But Kunal, we were talking about this in the morning as well. A, does a name like Cochin Shipyard become a buy after the earnings disappointment that has played out? And B, then what does it say about the leadership within the sector, which has now been standing all in with names like BEL?
See, now what matters over here, Aisha, is that the price for these stocks. Now, Cochin Shipyard was a stock which was almost at 200, 300 4 years back. That stock went to 2,800 or 3,000 odd levels. So after a 10x, 15x kind of a jump, these stocks are down 50% broadly. So what matters over here is that if you're a long-term investor, and then if you're looking at the price-wise entry, then I think 1,500 levels thereabout is a very good entry point for a stock like Cochin Shipyard, because that takes the stock back towards maybe a couple of years, 2022-23 odd, where the stock was almost at those 1,500 levels. So I think in that sense, the time-wise and the price-wise patterns over here matters quite significantly. But on the other hand, I think if someone is looking at a momentum play and is looking at more shorter-term charts, shorter-term oriented time frame, then I think something like BEL at current levels of 430, 425, thereabouts, HAL I think at 4,600 could be good bets from a shorter-term perspective.
Okay, what we'll do is we'll slip into another short break. On the other side, we'll continue coverage. Plenty to talk about in terms of stocks, some big movers in the markets today. Stay tuned and we'll get you all of that. Welcome back, and you're watching Closing Trades here on ET Now. One sector or space which has been under some bit of pressure is the defense space. Nilesh, of course, some of the numbers on the fundamental side didn't really add up. There was a Cochin shipyard, among others, including an HAL, which has caused some bit of pressure on some of those names. Good opportunity to buy, you reckon, at this point for a temporary reprieve bounce back, if at all that is possible?
Well, Harsh, absolutely. Yesterday we saw a slightly poor set of numbers from HAL. Then today we are witnessing a rebound, and similar is the case with Cochin Shipyard as well. But I believe these are the good opportunities. Specifically, HAL looks positive to me given the kind of structure it is panning out. 4600 is acting as a very strong support. Keeping that as a stop loss long position can be initiated at current level. We are expecting a pullback move towards 4900 to 5100. So these are the two immediate target on the upside. Cochin Shipyard, I would rather wait for some bit of a reversal candle, but yes, HL can be accumulated.
Alchem, that's a pretty active stock today. That's, of course, sharply reacted, I think, only to its numbers, was holding out in the green, and then there's been a sharp slide thereof. Stock down 1.5% right now. In fact, want to see what some of the other pharma contenders as well are up to, and where is it that you are seeing meaningful moves, if any. Let's bring up the likes of a Sun Pharma, Oro Pharma, etc. And then, of course, the other players within the CDMO space, like in Oro Pharma. Let's check in on a Gland Pharma as well. Oro holding very strong, 2.25% higher. Gland Pharma is the other one, which will also just come up for you on your screens, lying pretty quiet right now at about 1836 odd levels. Kunal Pharma, while of course it's been a very, very select story out there, anything that's looking attractive, any name that's showing leadership within the entire sector?
Yeah, so I think Lupin is something which looks very attractive at current levels. The stock has gone through a major time-wise consolidation, specifically over the last 8 to 9 months, where the stock has been stuck at this range of 1900 to 2000, broadly thereabouts. But the last couple of days, the last week of momentum for Lupin indicates that the stock is getting ready for a breakout, specifically about this major swing resistance around the 2050 mark for Lupin. So that's an interesting name to look out for. And looking at the volumes, the turn in terms of the indicators, we could be looking at the stock performing really well for itself. Denmark could be the other stock. And it seems like the stock has come out of a major correction, almost like a 500 to 700 point correction for Glenmark over the last 3 months. At current levels, looks like the stock is forming a double bottom as well as a strong support for a better risk-reward trade to take at current zone for the pharma pack.
Okay, so some names in pharma that you want to keep your eye out on. Nikhil Ranka, CIO Equity Alternatives at Nuvama Asset Management, joining us at this hour to talk to us about markets and more. Nikhil, let me first try and get a sense from you, in particular within the pharma basket. Biocon has been particularly active. You believe that justified the kind of moves that the stock has made, and at these valuations still attractive, you reckon?
Good afternoon, Harsh, and thanks for having me on the show.
Pleasure.
So if you look at Biocon, Harsh, the key trigger was if you see biosimilar segment, which is the key revenue driver for them. This quarter, there was almost a 300 crores sequential improvement in revenues, and margins have also been fairly strong this quarter. Plus, if you look at the management commentary, they have very clearly guided there are a slew of launches that are lined up for them in that segment. And from here on, every quarter, the guidance is the profitability should keep improving over the next few quarters for them. And on the regulatory side, also for the interchangeability, there has been a lot of regulatory concessions that's been given by US FDA. So all put together, I think the stock still has legs. We can see further 10-15% up move in Biocon, and we have a fair value of closer to 500 rupees for the stock.
Interesting. Okay, that's the take coming in Biocon right now. Asian Paints is the other case in point. That's holding up very smartly today, up about 4% higher. And Harsh, we were talking about the commentary from the management, right? The fact that they still actually see a threat and competition heating up in the sector. They're still not negating the effects of competition within the space. And they're still talking about a very, very subdued kind of guidance, if I can call it that.
Yeah, I mean, the numbers and the guidance painted a slightly divergent picture in comparison, but the stock obviously is doing very well for itself, 4% higher. The sense, of course, is that competition has remained as is, and therefore, at least that is not the reason why we've seen growth. Nikhil, anything that stands out for you to justify the kind of move that we've seen on the stock for the last couple of days? 5% yesterday, nearly 4% again today, so a 10% move in all in 2 days.
So Harsh, on the call, what you said is right. The management did guide that the competitive intensity in the sector still remains very high. And this quarter, there was a benefit of early Diwali in that sense. So a lot of demand, which last year came in Q3, came into Q2 this year. And going forward, they have maintained that EBITDA margin will stay in that band of 18 to 20%. So all put together, you are still seeing an EPS of closer to 55 rupees for FY27. However, what has happened was that given the fact that competitive intensity was very high, a lot of hedge funds had this name as a funding shot for them. And when a double-digit volume growth came this quarter, it took the street by surprise, and there was a lot of short covering that has happened in the name per se. I think closer to 3,000 levels, a lot of positives get built into the stock price. And the stock should then consolidate between this band of 2,700 to 3,000 rupees, I feel.
The take coming on Asian Paints. I'm just looking at SAML numbers there, and there obviously seems like a one-off, which is why you have that sharp uptick in the bottom line. The revenue, of course, is absolutely flat. We'll analyze those numbers because you can see a little bit of a sharp reaction coming on the earnings as well. But of course, there's more than what meets the eye. We will dig out more details, but after this very short break. Feel the market is headed next, and what could be good opportunities in trade. We were just talking about leadership names, and that really continues today with the Hindalco holding up very strongly, good 2% higher. ICICI Bank is looking very good. L&T stays, and Bharti, which is now inching closer to that 2100 plus level. But still in conversation with Nikhil Ranka. Nikhil, just what's your own preference or bias within the entire banking pack? Because what started off with PSBs also of late faded away, and it seems that once again private banks are the ones which are finding favor in the market.
So Aisha, our preference will still be in the banking space for large cap private sector banks. Clearly, if you see the valuations have become very, very palatable in that space. Most of the large cap banks, which earlier used to trade in excess of 2 times price to book, are now down anywhere from 1.3 to 1.8 times. One of the key concerns I feel the street has on the banking is whether we see a further rate cut in the December quarter. Because the impact of the 75 bips rate cut that we saw 3-4 months back flew through in the Q1 and Q2 quarters, where we saw on an average 15 to 20 bips NIM decline for most of the banks. If we have a further rate cut in the December quarter, then probably 10 to 15 bips of another NIM impact can come through. And that is what I think is keeping the stocks a bit subdued. But my sense is post that we should see NIM normalization, and these banks should bounce back.
Also, Samvardhana Motherson's numbers and the stock is flying in trade, in fact, doing very, very well for itself, 2.5% higher now. And from the lows of the day, much more than that. Huge spike on the stock, 3% higher. Strong beat on profitability. Motilal had estimated a 650 crore odd profit after tax number. I'll pull out the consensus as well, but for the moment, it's a very, very strong beat on that count. Kunal, views with regard to Samvardhana Motherson? Anything that you're spotting in terms of this 3% move, and what next?
This could be a potentially strong breakout move for Motherson, and apparently the stock had underperformed in the last, I think, month or so. I remember, I think 107, 108 was the resistance where the last time the stock reversed from, and on the downside 100, 102 was the support for Samvardhana Motherson. So I think it was trading into this 5-7% band potentially for the last 3 to 4 weeks. Breakout of this 107 mark now puts the stock into a potentially swing upside mode, where we may look at 114 to 115 as an immediate target.
The
Consensus in terms of profitability was 759 crore. It's come in at 827 crore, Aisha.
So that's quite a beat.
Yes, so it's a very strong beat with regard to those numbers. Of course, keen to understand how much of that is margin accrual. I'm going to just pull those numbers out, but yeah, stock has definitely moved 3%.
Okay, that's the take coming in right now on the stock, and you can see that spike up reacting to its earnings right now. But we should in fact try and get in our researchers as well to try and analyze what exactly led to that kind of bump up and such a big beat coming in on PAT, while revenue on a year-on-year basis is largely flat. But what were the nitty-gritties of the quarter? That is something that remains to be seen, and what contributed to this kind of growth. But Nikhil, I don't know how closely you've been tracking Samil. Any take that you may have on the earnings or the entire sector per se?
So, Aisha, unfortunately, the number just came when we were talking, so I haven't had the opportunity to look at the numbers very closely. And therefore, it won't be fair for me to comment on it without analyzing properly. From the headline numbers, it seemed that, both EBITDA and revenues were quite in line. So I think it has to be something below the line adjustment that has led to the profitability beat. So unless you actually see and dissect the numbers, it's very hard to tell what has led to that beat on the profitability.
Okay, all right. So that's of course on time. But is there a tilt, Nikhil, that you have in terms of what is it within the auto pack that you're liking? Give us a sense.
So my sense is, names like Samvardhana, if we do have a trade deal somewhere down the line in the next 1 or 2 weeks, these names should react positively. In general, if you look at it, auto names have seen a very decent rally post the GST cut announcement. Stocks have been up anywhere from 15 to 20%. And therefore, my sense is a lot of good news is already built into these names at the current levels. And our view is the upside in these names is probably capped to 5-7% from the current levels. What we will have to see is whether the same sort of buying we see for Q3 also, because it shouldn't happen that whatever was the pent-up that was there happened in the October month, and then November, December, again, we start to see very anemic 2-3% volume growth, because then stocks will start giving up the gains. So incrementally from these levels, we are a bit cautious on auto names, and till we see the November numbers, I would say, one should be a bit cautious on that side.
Okay, let's get in some perspective as well from a very keen and avid watcher of the India markets, and of course across the globe as well. Are on the interview, and the entire interview is going to play out on Friday at 3:30 p.m. I was chatting with Stephen Dober, and he answered some of the quick round of questions that I had with him, from, of course, the top Indian sector that he's betting on, to his view on the Indian rupee, the Fed, and of course the next big emerging market to watch out for as well. Here's a slice of that interaction. So now we're going to play something called the rapid fire. The rules are very simple. I'm going to very rapidly ask you some questions, and hopefully your answers would be full of fire. You just have to be very quick with it.
Okay.
Okay. So your first question is the sector in sweet spot. Your top sector in India for the next 12 months, if you can answer that.
Yeah, I think I'd probably look at the banks.
Banks. Biggest market risk. Biggest risk for India in the near term, would it be geopolitics, valuations, or global rates?
Geopolitics.
Okay. Dollar dominance continues, bullish or bearish on the rupee?
Bullish on the rupee.
Bullish on the rupee. Which comes first, Fed cut or India cut?
Fed cut.
Okay. Outside India, one emerging market you'd be overweight on today?
Brazil.
Okay. You were very, very rapid. Congratulations. Well, thank you, Stephen, for your time.
Thank you for having me.
It was great chatting with you. Lots of insight.
Good.
Thank
I
you.
enjoyed it. Thank you.
All right, so you have that interview to look forward to, and it'll be a good watch. But Trident, the numbers coming through as well on the bottom of your screen in terms of what those numbers look like. There's Eicher Motors. Okay, profit at 1369 crore versus the 1423 crore number, which was penciled in by analyst estimates. Okay, not much of movement on the stock price. We'll wait for more numbers to trickle through, but Eicher Motors definitely looking like something which could be in focus because of the numbers that are coming through. It's definitely a miss on the profitability. There is a decent near 5% lower in terms of what the expectations were versus the actuals on that consolidated net profit number of Eicher Motors. We'll pull up more numbers as they come through. But I'm just going to quickly also take you through what we were penciling in from Eicher Motors. Mind you, 26.5% was what the RE margin number was expected to come in at. 26.7% to be absolutely precise, and RE of course being Royal Enfield in Eicher Motors' case. Revenue is expected to go up by 43%. Profitability was expected to be around 1423 crore, which is a 30% jump up from the same time last year, which was at 1100 crore. That profit number, instead of 1423, has come in at 1369 crore. Now I'm going to also try and pull out the top line number for you to try and get a sense as to how that one is looking. But for the moment, it's a miss where the profit number is concerned, where Eicher Motors is concerned. The stock obviously slipping very, very precipitously. It's down now nearly 1.5%, 1.2% almost. And from the day's highs, we've seen the stock down nearly 2% now from the day's highs. So surely coming under some bit of pressure, given that profit number is a bit of a miss. 6172 crore is the number on the top line versus the 6091 crore number that was penciled in. So the top line number doing okay. It's the profitability which has taken a bit of a knock. 6172 was the top line number versus the ET Now poll of 6091 crore. So that one also we've seen come in largely in line, in fact. So the profit miss likely is driven by EBITDA as well as the margins number. We'll wait and watch as to how that margin number has come through. But yes, there you go. So 1513 is the EBITDA number, which is also largely in line. So I wonder what that difference therefore lies. So you're seeing a decent number on revenue as well as EBITDA. I'd reckon that there could be something between those two line items which has impacted profitability, because profit also has a negative bias. It's less than 5% lower than estimate. So technically it is in line, but it's definitely lower than what the estimate was, maybe 4% lower than the estimate. So
I wonder why though, because I mean, RE has managed to significantly outperform the industry in any case, and these are volume figures that you get on a monthly basis. So there's no sort of, drawdown from there. And this is a 43% volume growth in the second quarter itself that we were factoring in. So I wonder what really went by with the numbers. But yeah, we should actually get in our research analysts perhaps to talk about these numbers as to what could be the reason that they're not quite matching up to the expectations. Because like you're saying, I mean, just going by the prima facie details, one can't really pinpoint any factors at play. One, of course, needs to see what VECV margins, etc., and what that segment of the business actually performed like.
Yeah, that's true. Marginal miss on PAT is what the numbers seem to indicate. But Eicher Motors is obviously one stock which is in focus. Nikhil, your take with regard to, and I'm not talking numbers in general, the stock run-up has been fantastic. So Eicher Motors shareholders have done really well in terms of returns that the stock has given them. But give us a sense now at this point, can it continue to do what it has done over the last maybe year and a half?
So, Harsh, if you actually look at it, last 2 months have been very strong for Eicher. Earlier, if you use to see, RE used to do monthly volumes of close to 90,000 units. And for the last 2 months, RE was doing anywhere from 1.1 to 1.25 lakh units. So we've clearly seen the benefit of some pent-up buying coming through in the case of Royal Enfield. Further, if we build in 1.2 million sort of volume number for the full year and a 25% odd EBITDA margin, then what we are looking for is a 240 rupees EPS for FY27 in the case of Eicher standalone. 30 times number to that would mean close to 7,200 rupees of fair value for RE business, and you add 300, 400 for the CV business. That would make the fair value somewhere closer to 74, 7,500, which is like a 10% upside from here. However, the caveat here is that the volume number of 1 lakh units per month should sustain. And that is something that I think we should watch out for in the coming months of November and December, whether that volume run rate of 1.1 sustains or we fall back to 90,000 units in that sense. My sense is this quarter there could be some EBITDA impact because to clear the earlier stock, there would have been some discounts that would have been given and the company might have absorbed that one-time cost in the P&L. Because of which, I haven't seen the numbers, but because of which probably there could have been a slight miss on EBITDA is what my sense is.
Okay, slight miss on EBITDA, but EBITDA, at least the margin number, Nikhil, looks largely in line. Or rather the margin number a wee bit lower, but the EBITDA absolute number looks largely in line. It's the profitability which has seen a slight downtick versus the expectation. It'll still be called in line, as he puts it on the group. But it is a marginal miss nonetheless because it's 4.5% lower than what the estimate seemed to read into. On charts, Kunal, this one now bouncing back. It fell below the 6,800 mark, now bouncing back upwards towards 6,833. Give us a sense on charts. How does it look?
Yeah, so I think Eicher Motors broadly, I think looks to be a very strong stock, frankly, Harsh. And in case of the stock, I would believe dips down to say 6,700, 600 kind of a zone. That could actually be a good territory to go for a buy on Eicher Motors. It's going through a broad-based consolidation for the last 2 months. Prior to that, in the month of July and August, the stock had done fabulously well from a level of 5,200 to almost 7,000, 7,200 levels for Eicher Motors. So I think in that sense, after a 2,000 point rally, the stock is going through a patch of consolidation. Ideally, a 500 to 700 point retracement is a good enough zone for short-term traders to try and nibble into the stock price. So broadly 6,600 to 700 could be a good entry zone for Eicher Motors.
Reacting quite sharply to its numbers and now on its way to recovery as well. That's currently Eicher Motors in trade for you. Managing to cover its losses as we speak right now as the street digests the numbers. 68.40 on Eicher Motors is what we are currently seeing. Once again, the consolidated EBITDA margin has dipped a little bit on a year-on-year basis. 24.5 versus 25.5% is what they've posted in the second quarter. The consolidated profit has seen an uptick of 24.5%. And yes, the top line figure as well will just come up for you on your screen next. And that's a jump up of nearly about 45%. But I'm going to quickly bring on board Shrishti as well to help us analyze how the quarter for Shrishti, Eicher has been and what Volvo, Eicher, RE, etc. as well have done. Walk us through the details.
Well, yes, Eicher Motors numbers are majorly in line to what the street was penciling in, though there's a marginal miss in terms of the profit figure. But apart from that, if you look at the revenue and the operational performance specifically, that is in line. And we have been flagging off for our viewers that the margins will be the key to watch out for. 25% is what we were expecting and 24.9% is what the company has reported on the consolidated numbers. But along with that, the other flag point or the other point that we have been flagging for our viewers is the movement in the stock price, because given the fact for Eicher Motors, the stock was already at its near to its all-time high levels, so the numbers may be coming in line. We are seeing a bit of a profit booking on that particular front. But along with that, what we also get to see is the kind of volume jump, because volume jump has been 43% for Eicher Motors Royal Enfield, while there has been a marginal decline in terms of the VECV volumes, but the margin performance was seen to be improving. Was the expectation that the VECV margin performance will increase overall in Eicher Motors consolidated numbers. So all in all, a decent set coming in from Eicher Motors. I don't think think that the market should complain much at this point in time, and especially with respect to the operational performance. So that's the take coming in on Eicher Motors right now. But yes, we will wait by for more management commentary. 5:15 is the press conference. We'll get to know what their outlook is on the times ahead. What are some of the new exciting launches that they are planning for the Indian markets, and specifically with respect to the electric vehicle division, what are their plans to get the bikes on road in the Indian markets is something that we will be watching out for. So more details are waited, but for now, don't think that there's not much to complain about.
Okay, thank you so much for that, Srishti. That's of course the scorecard on Eicher Motors. Stock fell but has rebounded a wee bit, and now again it's fallen. It slipped below the 6,800 mark. Of course, we'll wait for that one to settle. But there are plenty of moving pieces on the earnings front, and we'll quickly move ahead and try and dissect some of the other ones which have come through. And Ather Industries, again, relatively smaller name, Kunal, but stock perked up from the day's lows, did very well, has come off from the highs, currently sits 4% higher. Do you have a view with regard to something like this one?
I don't track the stock often, but then just on the short-term charts, it's finding some good support at the 775 levels. You know, the stock has gone through a major correction from 1250 levels in 2023-24, but I think from there it seems like that maybe finally the stock has found some good bottom, but no major views over here.
I also wanted to have your view, Kunal, on an IndusInd Bank. The stock has done phenomenally well. Last 5 days, it's done 13-14%. Continues to be a stock in focus. What on charts?
Yeah, this is a very good breakout for IndusInd Bank, because this takes the stock back towards, I think, the zone where post the news flow for IndusInd Bank, the stock had gone through a bounce back mode. I think, if I'm not wrong, that level was around 600 where the stock bottomed out, and then from 600 the stock had rallied up towards 870 or 880ish kind of a zone. Today's move, the stock has come back to that 880, 890 levels, even though it's retraced from that zone. But then we've seen this historically, that time and again when the stock retests a particular major resistance point, it eventually gets into a breakout zone. So this looks to be a very attractive trade, and this comes at a point where the entire bank nifty and the private sector end of the banking names, especially the underperformers, are turning around. So, case in point, ICICI Bank, which we discussed earlier. So, I think in that prospect also, IndusInd Bank looks to be a very attractive trade.
Kunal, I can't get my eyes off from Eternal. I think it's breached 300 after quite some time. It's quite a sharp crack on the stock.
Yeah, this seems to be like a 3.5% correction, and 300 is something with the stock had not tested prior August.
Yeah, so it's been quite a while. It's almost headed in now for a 4% decline, although it's just 2.5 minutes left to go before we wind down for the trade. But it seems to be smacking off some serious selling here on Eternal. Just marking some of the other laggards as well today. It's not just Eternal, which has been one of the key pressure points. M&M abated a little bit. BEL as well was down. Titan, which has had pretty much a one-way move up ever since, I think pre-Diwali. But then again, not really seeing much of a crack. It's only 1% lower. So yes, the gashes other than Eternal haven't really been gashes. Little bit of a mild dip. Tata Steel, TCS, Tata Motors Passenger Vehicles, HDFC Bank, Kotak Bank, Bajaj Finance. These have been some of the key pressure points today. And on the flip side, of course, the gains have been much higher than the losers, or the losses on the losers rather. So Asian Paints goes home with a solid 4% of a move. ICICI Bank closing in at the high point of the day, almost a 2% bump up. Interglobe Aviation has done very well. L&T has held out very well. Bharti, strong as it goes, another 1% of a bump up. Hindalco has also been very strong. And that's been the case with some of the other names as well. The breadth of the market, although towards the dying minutes of trade, it's got skewed a little bit more in favor of the declines, but it's been largely even-steven for the better part of today's trading session, with PG Electroplast, Ashok Leyland, Motherson, Sumi, Hindustan Zinc being some of the standout performers. But on the flip side, the weakness was in Page Industries, which fell 4% today. NBCC reacted to its earnings, was down 3%. Policy Bazaar, Union Bank, etc. were some of the other laggards.
Okay, and on the back of earnings, there are plenty of movers, Ayesha, today. Let me start off with Cohance Life. Stock was down 9%, looked weak in terms of numbers as well as in terms of the stock today. Endurance Tech was down nearly 8%. There's another name, Quality Power, relatively smaller name, 6,000 crore in terms of market cap down 7.5% on the back of numbers. DCX Systems within the defense pack was also down nearly 5%. Lemon Tree, again, those numbers didn't look good. Nor did Cochin Ship, nor did KNR Construction, some of the big losers of the day. Data Patterns, on the other hand, was one of the top gainers, 8% higher. Nazara Tech, Care, as well as RK Forgings all saw decent gains on the back of the numbers that they disclosed. Asian Paints, of course, was the big winner of the day. And even within the Nifty 500 universe, there were quite a few big losers. Chemplast Sanmar, Go Fashion, 5 and 6% lower. Borosel Renewables was down 5% as well. BLS International saw a bit of cool off as well, 4% lower. And Radico Khaitan also was down roughly 4%. Ashok Leyland was the other big winner of the day, 5.6% higher on an Ashok Leyland. Nazara Tech Samvardhana has closed 5% higher after those numbers. Very, very strong set of numbers that Samvardhana has posted. Garware Tech, Aether Industries, Indigo Paints, some of the other names which have done well. Also, talking about Indigo Paints, Interglobe Aviation has silently risen 3 to 4% over the last couple of sessions, and that one was the other stock within the Nifty basket, which was in focus 2% higher in trade today, one of the top gainers on the Nifty 50 index. Kunal, speaking of an Interglobe, wanted your view on that one.
Yeah, so it's been an attractive move for Interglobe Aviation broadly. In the last 3 days, it's recovered almost 10% broadly from 5,500 to 5,900 mark. So it looks to be a good breakout candidate.
And what do you make of the index? What levels to look out for tomorrow?
You know, the chart on the background is exactly how the markets have panned out today.
Yes.
So I was
That
just,
volatile.
that volatile.
But that was made on purpose.
It changes every day, you know.
Yes, it changes every day.
So this is exactly how the markets panned out. You had a first half which was very good. In the second half, you saw the markets decline.
Just by the way, the same chart is behind you also.
I know, but I can't look behind. But tomorrow could be a different day altogether because tomorrow is the verdict. I mean, the outcome. For the Bihar elections, and I think that event trigger is something which could play out for the markets, maybe on the positive side, hopefully. But even if we close over here at 25,900 mark, this will be the second best weekly closing for the Nifty lifetime wise. I mean, all time wise.
Okay.
Second best weekly closing.
Okay.
The others being how best
So
or how better did we do?
27 September 2024, we closed at 26,180 thereabouts. The second best closing will be at, assuming if we close at 26,000 levels thereabouts.
It's been one of the longest waits, right? Hasn't it?
Yes, absolutely.
But patience pays.
Patience pays.
When it will, God knows. Okay, on that note, we're going to wind it up right here in this edition of Closing Trades. Thanks for watching.